I will just request the dignitaries to move towards the NSE bell for the bell ringing to mark the start of the Great Indian Bond Festival 2026. Can we please have a countdown of 10 seconds? Six, 5, 4, 3, 2, 1. Thank you, ma'am. Thank you, sirs. Moving on to the next event, lakhs of Indians have turned to one face every day for the past 30 years to get advice on personal finance and investments. As we begin India's biggest awareness campaign for bonds, we have the pleasure of having Mr. Anil Singhvi, Managing Editor, Zee Business, to deliver today's welcome address. With a 40-year career spanning media, capital markets, and financial services, Mr. Singhvi is one of India's most awarded business journalists, winner of the Best Business Anchor 2017, Most Credible Business Journalist 2021, and the Transformational Leader of the Year 2023. Since 2018, Mr. Singhvi has led Zee Business to become the #1 business channel in India. Please join me in welcoming Mr. Singhvi to the stage.
नमस्कार एंड गुड इवनिंग। सबसे पहले आप सबका कैपिटल मार्केट के इस मंदिर में बहुत बहुत स्वागत है, अभिनंदन है। स्वतंत्रता दिवस 15 अगस्त के साथ ही उत्सव की शुरुआत हो जाती है और उत्सव का ये सीज़न आगे बढ़ता है। अब धीरे धीरे आप देखेंगे जन्माष्टमी, नवरात्रि, दशहरा, दिवाली, क्रिसमस, नया साल और जो बिजनेस, इकोनॉमी और मार्केट से जुड़े हैं उनके लिए बजट, यानी कि एक के बाद एक कई उत्सव होंगे। लेकिन इन सब उत्सव के बीच में आज हम एनएससी के इस प्रांगण में एक और बड़े उत्सव की शुरुआत करने जा रहे हैं। और ये उत्सव कितना बड़ा है इसका अंदाज़ा आप इस बात से लगा सकते हैं कि आज इस कार्यक्रम में खुद सेबी की एग्जीक्यूटिव डायरेक्टर मिस मनिंदर चीमा जी हमारे साथ हैं, सेबी के सीजीएम के सरवानंद साहब हमारे साथ हैं। और ये इस बात की और इशारा करता है कि रेगुलेटर हिंदुस्तान के बॉन्ड मार्केट को लेकर कितने गंभीर हैं और इसको आगे बढ़ाने के लिए किस तरह से अपना प्रयास करना चाहते हैं। आप दोनों का बहुत बहुत स्वागत है। एनएसई जो तकनीक और साइज़, टेक्नोलॉजी और साइज़ दोनों के मामले में दुनिया के सबसे बड़े एक्सचेंजेस में से एक है और माना जाता है कैपिटल मार्केट के लिए, इक्विटी मार्केट के लिए। और अगर खुद एनएसई से चीफ बिजनेस डेवलपमेंट ऑफिसर, चीफ रिस्क ऑफिसर श्रीराम साहब हैं हमारे साथ, इससे आप अंदाज़ा लगा सकते हैं कि न सिर्फ इक्विटी बल्कि बॉन्ड और डेट मार्केट को लेकर भी एनएसई कितनी गंभीरता से आगे बढ़ना चाहता है। एक और ख़ास बात यह है, जिस कंपनी के साथ आज हम ये आयोजन करने जा रहे हैं वो है ग्रिप इन्वेस्ट। आप अभी मुलाकात करेंगे, बेहद यंग प्रमोटर्स हैं और सबसे सक्सेसफुल बिजनेस वो होता है जो लोगों की हर रोज़ की किसी न किसी दिक्कत को सॉल्व करने की कोशिश करें। आमतौर पर आप जो सब लोग जो जी बिजनेस देखते हैं, मुझे देखते हैं, तो शायद इक्विटी के बारे में एक आपकी ओपिनियन है कि अनिल जी आते हैं, इक्विटी मार्केट की बात करते हैं, इन्वेस्टमेंट्स की बात करते हैं। आप में से बहुत कम लोगों को पता है, शायद ही किसी को पता होगा, जो मैं आज एक राज की बात आपको बताना चाहता हूँ। और वो ये कि 1993 में 1993 में जब मैंने चार्टर्ड अकाउंटेंसी और कंपनी सेक्रेटरी का कोर्स किया, मेरा प्रोफेशनल करियर मैंने पढ़ाई ख़त्म करने के बाद शुरुआत की, और 1994 जून वो समय था जब एनएसई ने अपने होलसेल डेट मार्केट की शुरुआत की थी। बहुत कम लोगों को पता है कि पहले एनएसई में होलसेल डेट मार्केट की शुरुआत हुई थी जून 1994 में, और तब शुरुआत होने से पहले मैं WDM की ट्रेनिंग ले चुका था। और तब एनएसई महिंद्रा टावर से वर्ली से चलाया जाता था, वहाँ हेड ऑफिस हुआ करता था। और उसके बाद नवंबर 1994, शायद 3 नवंबर रहा होगा, दिवाली का दिन था, मुहूर्त ट्रेडिंग, पहले दिन एनएसई में इक्विटी मार्केट की ट्रेडिंग हुई थी और मुझे तब भी इक्विटी मार्केट की ट्रेडिंग में डीलिंग करने का सौभाग्य मिला था। और मैंने अपने करियर की शुरुआत में कम से कम 5 से 6 साल तक 2000 तक मैंने डेट डीलर के तौर पे अपने करियर की शुरुआत की। तो इससे आप अंदाज़ा लगा सकते हो, कहते हैं कि मेरा डेट पहला प्यार था, इक्विटी बाद में थोड़ा और आगे बढ़ गया, तो वहाँ से मैंने अपने डेट मार्केट की शुरुआत की। और इसीलिए आज जब डेट मार्केट पे, बॉन्ड्स पे अगर इतना बड़ा आयोजन, इतना बड़ा उत्सव होने जा रहा है, तो मेरे लिए इससे खुशी की बड़ी बात हो नहीं सकती कि मुझे वो पुराने दिन भी याद आ रहे हैं जब से डेट मार्केट की शुरुआत हुई थी। बात यह है कि हम कहीं भी जाते हैं, लोगों से मिलते हैं, तो हमेशा बात यही करते हैं, सर क्या खरीदें, कौन सा शेयर चलेगा, सेक्टर कौन सा अच्छा है, आईपीओ कौन सा बढ़िया है, ऑफ कोर्स इंक्लूडिंग एनएसई आईपीओ जो आने की तैयारी में, टॉक ऑफ द टाउन। लेकिन हार्डली कभी कोई ये पूछेगा कि कौन सा बॉन्ड खरीदें। क्यों? कभी सोचा है कि ऐसा क्यों? जबकि हिंदुस्तान में एक ऐसी बड़ी आबादी है जो पैसा लगाती है अपना डेट के नाम में एफडीज़ में। कुछ थोड़े से ज़्यादा समझदार या यूँ कहें कि ज़्यादा जागरूक इन्वेस्टर हैं तो वो फिक्स इनकम म्यूचुअल फंड में पैसा लगाते हैं। बाकी कुछ लोग ऐसे हैं जो रिस्क लेना जानते हैं और रिस्क लेते हैं, इक्विटी में पैसा लगाते हैं। लेकिन एक बड़ी संख्या ऐसी है इन्वेस्टर्स की जो पैसा तो लगाना चाहती है डेट मार्केट में, लेकिन रिटर्न इतने कम मिलते हैं। और मैं जितने रिटायर्ड लोगों से मिलता हूँ सब ये कहते हैं, अनिल अब इतने 6% 7% की एफडी में हमारा काम कैसे चलेगा, क्योंकि अल्टीमेटली उन्हें पता है कि वो अपनी इन्फ्लेशन की वजह से अपनी कैपिटल को तोड़ रहे हैं, न कि उसमें कमा रहे हैं। और ऐसे में एक ऐसे रोबस्ट बॉन्ड मार्केट की भारत को ज़रूरत है जो आपको इक्विटी से कम रिस्क दे और एफडी से या म्यूचुअल फंड यूनिट से थोड़ा सा, डेट म्यूचुअल फंड यूनिट से थोड़ा सा बेहतर रिटर्न दे सके। और इस ज़रूरत को ग्रिप ने समझा है, ग्रिप इन्वेस्ट ने समझा है, और इसके लिए मैं आप लोगों को बहुत बहुत बधाई देना चाहता हूं कि आप वो एक काम करने जा रहे हैं। और जनरली जितने भी स्टार्टअप्स, नए बिजनेस आइडियाज़ वही सक्सेसफुल होते हैं जो आम आदमी की किसी न किसी ऐसी प्रॉब्लम को सोल्व करने की कोशिश करें जो आपको और हमको पता है कि प्रॉब्लम तो है, लेकिन हमने कभी उस दिशा में सोचा नहीं। अगले 2 महीने आप बहुत सारा एक्शन देखेंगे बॉन्ड मार्केट को लेकर, क्योंकि ग्रेट इंडियन बॉन्ड फेस्टिवल हम आज शुरुआत करने जा रहे हैं। टीवी प्रोग्राम्स देखेंगे, प्रिंट एड्स देखेंगे, आज भी देखे होंगे आपने। कई शहरों में जाकर हम ये कार्यक्रम करने वाले हैं ग्रिप इन्वेस्ट के साथ, और हम कोशिश कर रहे हैं कि ज़्यादा से ज़्यादा लोगों को पता चले कि इंडिया में एक रोबस्ट बॉन्ड मार्केट है। काफ़ी प्रयास रेगुलेटर्स की तरफ से हुए हैं, सेबी की तरफ से हुए हैं, काफ़ी प्रयास एनएसई जैसे एक्सचेंजेस की तरफ से हुए हैं। हमने भी अपनी तरफ से कुछ कोशिश की है, थोड़ा बहुत वो करने की, जिसके जरिए हम हमारे दर्शकों को, इन्वेस्टर्स को ये बता सकें कि बॉन्ड मार्केट आपके लिए है। अब तो बॉन्ड मार्केट इतना आपके लिए अवेलेबल है, रिटेल के लिए अवेलेबल है कि आप 1,000 रुपये से लेकर 10,000 रुपये तक आप बॉन्ड मार्केट में सीधे तौर पर इन्वेस्टमेंट करने की शुरुआत कर सकते हैं। इससे ज़्यादा बढ़िया बात हो नहीं सकती। सो आई थिंक हर एक तरह के इन्वेस्टर्स के लिए बॉन्ड मार्केट अब बनता जा रहा है। और सबसे बड़ी बात ये भी है कि जो कुछ आपको डायरेक्ट इन्वेस्टमेंट नहीं करके इनडायरेक्ट इन्वेस्टमेंट करना होता था डेट मार्केट में, उसके चलते आपको वो फ़ायदा नहीं मिल पाता जो मिलना चाहिए। तो मैं उम्मीद करता हूँ कि आज जब हम इस ग्रेट इंडियन बॉन्ड फेस्टिवल की शुरुआत कर रहे हैं, आगे चलते हुए हिंदुस्तान का बॉन्ड मार्केट, जैसा आप जानते हैं दुनिया भर में जितने स्टॉक मार्केट हैं उन सबका मार्केट कैप जोड़ दें, उसके बावजूद उससे बड़ा बॉन्ड मार्केट है, उससे बड़ा डेट मार्केट है। सीधे तौर पर हिंदुस्तान का जो बॉन्ड मार्केट है वो भी एक समय आप देखेंगे कि हिंदुस्तान के इक्विटी मार्केट से काफ़ी बड़ा होगा। 260 अरब रुपए का हमारा बॉन्ड मार्केट है, वो इससे बड़ा होगा, आगे बढ़ेगा। और जिस तरह के प्रयास आप हम सब मिलकर करने जा रहे हैं उसका नतीजा हमको सबको देखने को मिलेगा। मैं इस फेस्टिवल के लिए अपनी शुभकामनाएं देता हूं, और आप सब लोग यहाँ पर आए, इस कार्यक्रम में आपने हिस्सा लिया, मैं आप सब लोगों को धन्यवाद देना चाहता हूँ, स्वागत करना चाहता हूँ। और मैं उम्मीद करता हूँ अब से अगले 2 घंटे जो कुछ हम इस पूरे बॉन्ड मार्केट से रिलेटेड जो कुछ बातचीत करेंगे, चर्चा करेंगे, डिस्कशंस करेंगे, वो आगे चलते हुए देश के बॉन्ड इन्वेस्टर्स के लिए, फिक्स इनकम इन्वेस्टर्स के लिए बेहद काम का होगा। इन्हीं शुभकामनाओं के साथ धन्यवाद, नमस्कार।
Thank you, Singhvi sir, for underscoring the importance of the debt market and the vision behind this festival. Can I request Nikhil, Group CEO, Grip Invest, to join us on stage and present Mr. Singhvi a small token of our appreciation. Thank you, sir. Thank you, Nikhil. Moving ahead to the next event, I would now like to invite Mr. Sriram Krishnan, CBDO NSC, to the dais to say a few words. Mr. Krishnan and the team from NSC have been co-pilots to GRIP's journey in enabling a secure, transparent, and best-in-class platform for bond investments, and particularly to the entire OBPP fraternity. We would love to hear from you, sir.
Good evening to all of you. Firstly, it's a pleasure to be here to see so many people coming and participating in a fixed income event. It's always a joy to see and to be associated with anything that can help Indian bond markets. India's emergence as a fast-growing economy is much talked about. And we keep making this comparison. And I've been in a few bond market-related events in the recent months. And there's one piece of statistics that's often quoted, that the value of outstanding corporate bonds, which was about 17.5 lakh crores in 2015, has gone up to 59 lakh crores in 2026. And now therefore, the value of corporate bonds, outstanding corporate bonds, is 17% of India's GDP. And a lot of people are happy. A lot of people are happy with this progress. Yet, I want to take a moment and point out to you that India's market capitalization of the equities is $5 trillion. It's 130% of India's GDP. If you look at the other countries, in the US, the market capitalization of listed companies is around 68 trillion, which is about 200% or even more than 200% of the GDP of the US. And the outstanding value of corporate bonds in the US is 100% of the GDP. So as big as the GDP at least, if not double of it. So they are about 28, 32 trillion dollars in terms of value. Look at some other countries. You look at Korea, it's 80, 90% of the GDP, size of the bond market. Malaysia is 50, 55%. China is one of the countries with low number, which is 35 to 40%. Yet we are just 17%. So we have a long way to go. And obviously, it's a task cut out for all of us to work on this, to reimagine the journey from here to maybe 100% of GDP. How do we take the bond markets ahead? That's the real challenge in front of all of us. Annual issuances in FY25, FY26 have been around 10 lakh crores. Again, a number with which we can either be very overjoyed and satisfied, or we can ask ourselves what can be done to improve this, to increase this, make it much bigger. Perhaps one or two things can be done. Of course, the tax laws can be changed. It's very easy to demand a change in the tax laws and claim that, that's the only way the market can grow. But I refuse to take that argument. But one other thing which strikes me is that in other countries, for listing a corporate bond, credit rating is not mandatory. It's optional. Perhaps we need to think about it. Maybe we should make it optional. And what will happen then is that there will be investors who will prefer to invest in a bond which is credit rated and then listed. There could be some investors who are okay to invest in a bond even if it is not rated. And then there would be some investors who are ready to invest in a bond even if it is not listed. So it's their choice, right? We can always tell them that there are three categories. One is rated and listed. One is not rated but listed. And the third is totally unlisted. It's up to you. And I think investors today in India are getting cleverer with each passing day. And the younger generation certainly can make that discretionary judgment and call. But on the positive side, the UCCs that used to be exposed to corporate bonds and structured corporate bond products used to be only about 29,000 in April 2025. That number is now about 8 lakh, which is a significant growth. And for reimagining the way this journey can be, I think we have to give full credit to the online bond platform providers, and Grip Invest has been one of the leading OBPPs trying to do their best to reimagine how we can introduce corporate bonds to the retail participants in India and to get them to do more. Monthly trading volumes have gone up 4.7 times from the early part of FY 2026, and transactions have grown sixfold from early 2026. So lots of positives, yet the bar can be much higher, and obviously it's a long and tough journey for all of us in terms of what needs to be done. But if you really think about investments into fixed income, for a retail investor, investing in bonds can appear challenging. And it's actually a bit more complicated than investing in equity, because there are so many issuances of each and every issuer. It's very challenging to identify which is the latest one, which one is, was rated AAA when it was listed, when did the rating change? Suppose the rating has changed subsequent to that issuance, and today it's not AAA anymore. Then how do you take care of this? Is there a way we can simplify this? Probably that's one aspect for all of us to think about. Is there a way we can introduce a red, green, orange color kind of a symbol so that people can understand these products better, maybe we should think about it. Overall, increasing retail participation is a function of how easy the process can be. It's about increased investor awareness. It's about increasing participation. So the biggest factor I would highlight as the one big factor that we all need to focus on is increasing the accessibility of corporate bonds to retail investors. And I think that's where platforms like Grip Invest can make a big difference. So at NSE, we are very committed to working with the online bond platform providers to help them in every possible way, and also to work with our esteemed colleagues from SEBI and give our contribution, make our contribution in every which way possible for the growth and development of this space. I'm like I said earlier, very happy once again for all of you to be here. I hope we have a fantastic and productive discussion. And while I'll be missing the panel discussion, but I think it's a great way to celebrate this function and to kick it off. Thank you very much.
Thank you, Sriram sir, for your valued perspective and insights. Can I request Nikhil to present Sriram Krishnan sir a small token of our appreciation? Thank you, sir. We are now moving to our first set of panel discussion, an opportunity to hear directly from the regulators responsible for the framework that made bonds possible for the retail industry in the first place. I would like to begin by inviting our moderator for this panel, Mr. Bhupendra Chaube. Mr. Chaube needs no introduction. He has given us 30 years of frontline media coverage at NDTV, CNN, IBN, India Ahead, and now reshaping how news is delivered at the Squirrels. I would also like to request Ms. Maninder Cheema ma'am, ED SEBI, and Mr. K. Saravanan sir, CGM SEBI, to join us on stage. Along with that, I would like to request Nikhil Aggarwal, Group CEO, Grip Invest, to join us to provide the bond platform's perspective to the discussion. Now, before starting the panel, I would also like to invite NSE to felicitate all the panelists. For felicitation, I'll request Mr. Ankit Sharma, Chief Regulatory Officer, NSE, to come on stage to felicitate Ms. Maninder Cheema ma'am and Mr. K. Saravanan sir. Thank you, sir. Now, can I also request Mr. Rohit Mandotra, sir, VP NSC, to felicitate Nikhil Aggarwal, Group CEO, Grip Invest. Next, I would like to request Mr. Rohit Mandotra, sir, to felicitate Nikhil. Next, I'll request Mr. B. Gauri Shankar, Head of Products and Strategy at NSC, to felicitate Mr. Bhupendra Chaubey. Requesting the dignitaries to kindly take the seat. Now we will start with the panel discussion. I would like to invite Mr. Chaubey sir to be the moderator for the panel discussion. Over to you, Chaubey sir.
Well, thank you. Thank you very much. Let me just begin by saying that it is such a great pleasure and an honor to be here at this iconic venue, to be in conversation with such stalwarts from the regulatory framework. You know, I come from Delhi, I don't come from Mumbai. And I must say that we often look at regulators through a very different prism in Delhi. You know, the world between Delhi and Bombay is very different. So it's great to be here, and it's great to be listening to all the minds here who've been speaking with great passion about what needs to be done to promote the bond market in India. I have some very, very fundamental questions, because I think the success of any new idea is how accessible can you really make that idea at the end of the day. Let me first begin with you, Cheema ma'am, and let me ask you to sum up for us, you know, give us the journey of the kind of efforts that you all have been putting in SEBI over the last few years, in terms of simply making more and more people aware of the fact that अगर पैसा बनाना है तो सिर्फ वो स्टॉक मार्केट में इक्विटी में जाके नहीं है. There is something called the bond market also. What are the kind of steps that you've been taking, ma'am?
So first of all, let me thank NSE, NSDL and GRIP for organizing this program. And to answer your question, this is one of the methods by which everyone in the ecosystem is making efforts to increase awareness of the bond markets. I think some numbers were shared by Mr. Krishnan just a while back. So the way I look at it and the way we look at it from SEBI's perspective is that bond market was really not accessible to retail. Normally, retail access happens through public issues. If you look at the data on bond markets, public issues are less than 1% of total bond issuances. OBBPs has been a huge initiative which brings the privately placed bonds towards the retail, makes it accessible to the retail. So this is an innovation which has happened and which allows the use of technology by all the people who have stepped in to create these platforms and enable retail to access bonds which were hitherto completely inaccessible. They have had a fairly steep upward curve in the terms of access and number of investors that they are able to reach today. But it's very, very early days in terms of access to retail.
I will stay with that word access, because I think that is where this journey really needs to begin. How Saravanan, maybe you can throw some light on this. You know, the one word I hear a lot is kickstarting the virtuous cycle within this entire space. Do you want to tell us what are the kind of steps that you've been taking at your end?
See,
Yeah, you're audible. Yeah.
see, SEBI has been taking number of steps actually. And we are taking steps from multifocal point of view. From the policy initiatives, we have always been looking at what all policy easing that can be done. That's one thing. Then from the point of view of the supply side, what can be done. And all of us here know pretty well the kind of market that we are presently in. You know, I mean, I can say that there are more opportunities. That there are more opportunities for the supply as well as for the demand side also. Thing is that today, I look at the numbers, I get a feeling that See, I come from the equity. So when I compare the equity, I find debt to be a little bit skewed in terms of the supply as well as the demand. So if you look at from the point of view of what else can be done. So the first thing is that we need to democratize, we need to broad base the market, and we need to increase the supply. We need to also increase the demand. And there should be a shift in focus, slightly should not be concentrated only on the institutional side of it. There is non-institutional, huge chunk is also there. So all these things have to be looked into, cogently. And what we have been doing is, we have taken very many steps. Like the one thing which we have been, doing right from the issuers perspective is that we have been meeting issuers, at different locations, and we are trying to understand what the concerns are like. We can discuss more about all these things and other questions also, just to begin with what all we can do, what we have been doing.
Okay. Nikhil, why don't you come into this? An interesting number was just thrown up by the Chief Business Officer for NSE, where he says that look at the proportion between the capitalization of the Indian stock markets, right, versus the GDP, and look at where we are when it comes to bonds. There are two ways to look at that statement, right? One is that the peak of Indian stock markets has already been reached, and therefore everyone on the supply side and the distribution side is looking for the next big green shoot. For companies like you, now that you're on the same stage as a regulator, do you still look at the regulator as a bottleneck? Or do you think the regulator is really walking the talk? And that's where, the Delhi versus Bombay story comes into play, because I do know how governments can act, I do know how regulators can be. What has your experience been so far?
So I'm not answering this because the regulator is sitting next to me. But can I say that I have a list of 10 more asks? Sure, right? There will always be an unending list of asks. Sriram talked about taxation, talked about unrated bonds. So I think there's always an opportunity to do more. But I think what has happened from a regulation standpoint in the last few years is truly transformative. And I think SEBI, the team across these years has been very consistent in bringing about change to make that retailization of bond market happen. At the same time, understand that it's not just about the retail market, but as Saravanan sir said, it's also about working with issuers. It's also about working with the exchange to create infrastructure. It's also working with NSDL to enable things like depository participant. So I think there's a lot that has happened. Do we have enough today in regulation to make the bond market truly successful? Answer is yes, right? There can be more, but we are good enough. I think there is a lot more that needs to be done outside of regulations today that will take the market to the next 2x, 3x of this current scale.
Maninderji, if I keep drawing the comparison between equities and bonds, when it comes to the equity market, there is a lot of work which has been done by institutions like yours to provide safety, right, to the investor. What is your thought in ensuring that this entire new business idea that we are all talking about, which is the space of bonds, the question of safety remains paramount, and the person who's actually becoming a part of this entire government treasury process, the money gets protected? How does that happen?
So investor safety has been such a paramount concern in the bond market. Sometimes it feels like it's higher than in the equity markets. Just to get a map of the situation, you have more than 80% of the bonds today which are either AA or AAA. You have less than 10% bonds which are below A, which means unlike various other markets, and in a stark contrast to US markets, we have bonds, money going into bonds which are rated as super safe credit-wise. Just couple it with the experience of some significant defaults which happened in the last few years. Surprisingly or not surprisingly, the defaults happened in AAA rated paper.
In AAA ratings. Very
So that has made even institutions very wary of investing in corporate bonds. So when it comes to investor protection, the general sense is not below AA. If you look at our institutional investors, which are indirectly holding paper on behalf of investors. So look at pension, look at insurance, look at mutual funds. They're very wary to go below AA. Nobody wants to go to. You look at EPFO, which is one of the largest holders of debt paper. They don't even go to AA. So AAA. So the concern with safety in bond markets is very, very paramount. And in that sense, when we look at unrated, as of now, it is unthinkable. So from a regulator's perspective, investor safety is right at the top. And to that end, we have just now introduced a consultation paper on a credit riskometer. So while retail is now able to access lower rated bonds, we also want it to be visually very clear to the retail investor that this is a red colored, low, it's highly risky. So if you are investing in a high yield bond, if you are looking at a 14 to 15% return, please note that there is a certain risk. And so risk is very much there.
But can I just put it very simply? You know, when I look at stock markets, equity, right? It's all very exciting. It's like, if I was to give a cricketing analogy, it's like T20 versus 50 overs versus test match. You know, the bond market story, is it still a test match? And do we really have to now give it the flavor, the excitement, the buzz, you know, of somewhere between, if not T20, but somewhere between, let's say, a one-day international and a T20, if you follow cricket at all?
So bond markets have always been boring. I don't think bond markets are very exciting.
So you can't make it exciting. You can't make it exciting. You think bond markets should not be exciting?
Should not be exciting.
I have the same answer. Even as a platform, bond markets should not be exciting. The purpose of the bond market is to offset the excitement that comes with an equity portfolio and create that balance.
But you know, again, the number that I think somebody in the audience was pointing out, that somewhere the bond story has to be, you know, slightly above the fixed deposit story and slightly below the returns of equities. How will that happen? I'm just trying to understand the volume of information, call it noise, call it information, which is all around, you know, equities. Do you think some concrete cogent steps, whether as an industry player or as a regulator, need to be taken to push the story of bond in that direction? How does that happen, Nikhil?
For me?
Yeah, for you, and then we can get Saravanan.
I think the answer is yes, right? But I don't think it's limited to GRIP as a bond platform or the bond platforms or SEBI as a regulator or NSE as an exchange. I think everyone has to do their part. And there are many more parts, Bhupinder. There has to be an evolution in the way the product is offered, right? For example, what ma'am said, most mutual funds in India, debt mutual funds in India don't go below AA. Why cannot we have an ETF? Why cannot we have a debt mutual fund that is truly a credit mutual fund where investors can participate in bonds? It's just a different way of participating in bonds. So I think there has to be an evolution across the board. We're just starting the cycle. We're already seeing massive uptake from retail investors coming out of smaller ticket size and technology. These are the next set of changes that will drive this market forward.
Okay, Saravanan, tell us something about, you know, about the tech play, which is involved in this entire space of promotion of the bond story. As a regulator, where is the interface between, you know, pushing bonds towards a greater audience, towards a bigger mass, and the availability of technology?
So very many measures have been taken by SEBI in the past. We are trying to give push for all these things. To start with the EBP platform, electronic bond platform is one where, you know, public issuances hit. So we wanted to have kind of a transparency in that market where we wanted to, you know, bring more, you know, price discovery, price transparency, etc. That's one thing from the primary market point of view. Again, from the secondary market point of view also, of course, there needs to be a big amount of, you know, liquidity that you will be expecting, but there is a request for quote, RFQ platform. That one platform is one where, you know, we are expecting, for example, all the OBPs are expected to trade only through the RFQs. You know, there's no RFQ. I mean, other than RFQ, you're not supposed to trade. So earlier it all used to be on the phone. I pick up the phone from my side, you'll from the other side. We both will be, you know, negotiating. You know, that's how it used to happen in the wholesale debt market, you know, years ago. Now the RFQ platform has come. This has been specifically brought in for the purpose that there should be some transparency. You know, it should help in price discovery as well. And we are also telling, you know, other intermediaries and, you know, registered investors with us like mutual funds, AAS, PMS, So they also shall route certain percentage of their trades only through the RFQ system. So RFQ is a kind of a technology where we are now largely depending upon for the purposes of secondary market as on date. And OBP is also contributing that to that actually. So this is a kind of technology interface that I could see as of now.
Okay. Maninderji, on the entire dialogue, which we keep hearing again between governments and regulators, that we need to push this bond story towards people who are, as Nikhil says, somebody is investing, even 100 rupees, right? Now, if you're going to have such a huge diversity of institutions and individuals from 100 rupee to 1,000 rupee to 10 lakh to what not, is there a difference in the nature of challenge then, let's say, between the bond market and the equity market before you? Or do you think the approach remains the same as a regulator?
I think for the bond market to move forward from where it is now, we have to have a different approach for bonds as compared to equity.
How? Can you throw some light on that?
So, bond market primarily remains an institutional and wholesale market. If you look at the structure of the market as it exists now, equity market is a public market where if anybody wants to list, he does it through a public issue. There is a cost attached to the IPO, and it's very interesting. The issuer is happy to raise money through an IPO, and the cost of issuance is built into the issue. So the issuer per se does not bear the cost of issuance. Normally when a bond happens, it is related to the coupon, and the cost directly relates to the time taken to raise money. So issuers find it very efficient in terms of cost to do a private placement. It is faster, it is more efficient in terms of how much time and money you are spending to get the funding. That is not going to change. It takes 3 days from preparing an offer to getting the money today. You do a public issue, it takes about a month. And that means money. And in bond market, every day counts in terms of coupon. So this market is going to remain. So today the way it is going to the public is through OBPPs, where we are doing some sort of a downsell of a privately placed issue, which is going into retail hands. It's almost like, it's a broker-dealer model. It's not that equity model. The way trading takes place also is not at all like equity. Today the OBPPs are offering a single price. They are saying this is the bond, this is the price, this is the yield, and this is the rating, and you take it. So the price formation per se is happening on RFQ when the OBP is reporting or negotiating the trade, but the investor is not really entering into pricing. So the entire structure of the market, the way it exists now and the way it is evolving is very, very different from equity. The way you do the pricing, the way you assess the risk, the period for which you invest, the reason for which you want to trade are very. So the retail investor is looking to invest with the ability to get out in case he needs the money back.
Okay.
He's not looking to trade. Who is looking to trade? It's the larger institutions who are looking to trade because they understand and they have the volumes to make money off of a few basis points of difference.
So, Saravanan, Maninder gave us a very interesting figure a short while back, right? When she says that 70% of AAA rated bonds are the ones which have ended up being stressed. So let me ask you, what's the kind of lesson then, that institutions, regulators like SEBI take when you have a scenario where the biggest chunk of the most highly rated bonds are the ones who are performing the worst?
As I mentioned earlier also, now today the market is a bit skewed. As she rightly said, that percentages, the numbers are suggesting that is it something this market is carved out only for a set, select set of people? Is it like that? And where is the democratization over here? And as we compare ourselves with the Western countries, the kind of infrastructure over there, the kind of issuances that they have come up with, so that's totally different, contradictory to what we are having over here in our market like. And we need to bring in more issuers. And for MSMEs, I find that this is a good opportunity. So whenever we go for our issuer outreach programs, that's the one we started out somewhere in February this year. we meet issuers at different, places. We try to understand, what kind of concerns do they have. So one thing we keep telling them is that, okay, maybe resorting to the traditional bank or NBFC funding for your projects, but for you, the ideal place shall be a corporate bond structure over here. Because SEBI has put in a lot of, the regulations and the structure in place. Maybe I can say that it's kind of an awareness, to some extent. Second, there are some legitimate, concerns the market must be having. So our meetings with all these issues suggest that, okay, there are some concerns, so I don't deeply look into it. Just to give a clue about what kind of a concern is number of the ISINs limit we are having. So markets do come and tell us that, why don't you increase the number of ISINs, and we have recently put up a consultation paper also on that. So these concerns keep coming to us actually. So what's happening when it comes to, other than the ones that's AAA, AA category, if you want to get into other areas, other people also to come into it, then we have to look into the concerns that they are having. And I find that the unlisted securities market, unlisted debt market is huge in, numbers. So why you're not getting listed, though you issued the bond, but you're not coming to listing space? Why are you not knocking at the doors of the exchanges over here? It's a question that comes to our mind. So what happens is there are some concerns they do have. And we have been looking into all those things, and one of the concerns is also about the cost of, issuances, which she touched upon. So that also we are looking into. So what's happened today, when you look at it, we are seeing, bond market from a 360-degree, panoramic view, where we are trying to understand what are the concerns. Is it a concern with respect to the cost? Is it about the kind of people that are coming into? Is it demand or the supply? Is it technology? Is it awareness? Whatnot. Everything is being cogently looked into. We do not want to leave any stone unturned. We're looking into all these pieces together and giving our push over here. So once if all this is, come into play, then you can see that, there is a dramatic change in the structure of the market.
Nikhil, as someone who sits closest, let's say, to the retail investor, what would you say is the single most common misconception that you feel you will have to create, about this entire debate that we're having about safety, about promotion? What's that common misconception?
I think the one misconception that we have to fight as an industry is that fixed returns mean guaranteed returns, right? Because where retail investors are coming from is an environment of FD, right? That's the equivalent fixed income product that they have seen. And I think from both for the investors' benefit and for the growth of the industry, it is important to break that association. I think people need to understand that these products are safe. As ma'am said, there's been a history, there's a lot of track record on it. These products are non-volatile, they're not linked to the market, but there is some amount of risk involved. I think understanding of that is the beginning for this market to then truly realize its potential.
Maninderji, if you were asked to lay out maybe 2 concrete steps that you think as a regulator you should be taking to ensure that the story of bond market reaches as many of us have been contemplating about, would you be able to really pinpoint these 2 things that you think the industry as a whole, stakeholders should be focusing on?
So the thing about bond markets is SEBI is not a sole regulator of bond markets. So
but you're the Margdarshak. Let's say you're the Margdarshak.
No, so why that's important is because bond markets it's touching various other, let's say, regulators or other institutions, and everybody has a say and a role in it. So what's the biggest problem in our bond market? Which I already said, it's skewed towards AAA. So the first thing we would like to see is development of a yield curve which exists across various ratings. So we need to have far more activity on the lower rated side, which is A and below. Now, why would somebody not go into A and below? And if you look at the government's initiatives, they tie into this reasoning. I would go into A and below provided my ability to in case of a default, have recourse to the security is certain. So in case a company defaults, today we have the IBC process, we have the debenture trustees, and SEBI is working on this. How long does it take to recover my security in case of a default? I have a junk bond, I have a BBB or below. how certain am I as an institution that I will be able to recover something out of it? So the pricing and the ability to go right to the end, when I say I'm issuing a secured bond, to be able to exercise that security, that leg has to improve. Another thing which needs to come in is that I would step into a lower rated bond if I have the ability to hedge my risk in some ways. So no, to take recourse to security is the last option. Before that, I need to be able to hedge my risk. Therefore, the government has been pushing credit derivatives concept. So that has to come in. Exchanges have a role to play in that. Traders have a role to play in that. Institutions have a role to play in that. And since the investors in all these instruments are institutions, their respective regulators come in. So it's a step-by-step process.
Okay.
So the piece which is missing is high yield, low rated. That needs to come in before we can have a more active bond.
So let's not fall. So I hear this very, very clearly, and I'm so happy, Maninderji, that you summed it up beautifully for us. That don't always fall for the letter A, right? Just because it's AA or AAA doesn't mean that it's really 99%. Saravanan, you want to add A versus B versus C?
Before I do that, I just have one announcement to be made on Nikhil's comments about the kind of perception investors would be having, or they considering these bonds to be something guaranteed type of instrument. And on this precise point, and keeping this and taking this as a clue, SEBI has been we are revisiting the advertisement code for OBPs also.
Okay.
Yes, in fact, SEBI at the board level, we have been revisiting the advertisement code. We are trying to come up with some common, advertisement code. And for OBP specifically, we are looking at the kind of challenges that they have been facing. Tomorrow no one should blame them also. So there is a responsibility, there is cost on us also. So we are looking at the, advertisement code, revisiting them. And soon you'll be finding a kind of public consultation on that. And your question on the priorities, if you see, as I mentioned earlier, there are 3 priorities for me. One is the supply side to be improved, and there is a demand. Of course, these two have to be, geared up. Third one is, of course, the market liquidity. Without liquidity, these two may not be really possible for you.
Okay. So Nikhil, finally then to you, tell me, do you foresee a future where maybe 3 years down the line, if not earlier, people in the Mufassal towns of India, the rural backyards of North India, whether UP, Bihar, Rajasthan, Madhya Pradesh, would feel excited enough about the bond story to actually start thinking in terms of becoming active participants? Do you think that's possible? And I'm talking through my hat.
Answer is yes, but there are some caveats.
Yes and no, you mean?
Yes, but I think it's about the product. So for example, if you think about post office deposits, they became a very popular fixed income product. Chit funds also unfortunately became a very popular product in the towns that you're talking about. But for example, if the Government of India bond was to be truly talked about in these products made accessible at the equivalent of a panwala in a Musafil town for people to be able to purchase, or I'm just going to name a company for the sake of example, if there was to be a Reliance bond available at a small ticket size that was easily accessible, I think that what people are looking for is trust, awareness, simple form factor, a debt mutual fund at 50 rupees that gave you 10%. I think that is the way that in the next 3 years that adoption will begin to happen for that persona of a customer. And then eventually, people will start doing more things. The same way as equity adoption happened with MF, then stocks, some people have migrated to FNO. I think it's a journey. That's the same thing that will happen for fixed income.
Okay, so final word then to you, ma'am. To this audience here and to all the viewers who'd be watching this, what's your one message that you think should be coming out from this panel, from this platform?
So investors should very actively look at bonds as an investment, as an alternative to FD, because you can get higher returns as well as liquidity with the help of OBPs. Today, there are some tax issues, but we hope that tax-wise bond becomes somewhat more attractive. That would, I'm sure, encourage investors to come in more. And we are also, today there are 10 lakh demat accounts holding bonds. That's a very, very small number. Part of the problem is reach. So while OBPPs are doing their part, we are also looking at potential distribution framework for bonds so that small towns, villages, people can go and at least, instead of selling them CIS type of Ponzi schemes, sell them genuine secured rated bonds. So that's something I feel should increase the accessibility. So distributors, OBPs coming into the bond space, which will allow very, very small investors to be also able to invest in bonds in a regulated product. So that's the last thing I would like to leave this.
Okay, so you know, there have been murmurs and there have been some statements. Already, some authorities are now talking about tokenization of bonds as well. You know, but the message which needs to go from this panel, from this room, to a larger mass of people is how do we look at the story of bonds? I keep coming back to this word. If you don't excite me, how will I look towards that story, right, of bonds? So what's that message you think that needs to come, that needs to go to the wider audiences out there in this bond story?
So there are two perspectives to the bond which I look at it from, the kind of efforts we have been putting in. One is a deepening initiative. Okay. So one message to this audience would be that look at bonds as a true way of fundraising. That's one to the stakeholders, whoever is from that side. And from the investor's perspective, bond is also an opportunity for you to broad base your investment basket. So this will help you in mitigating risk. Look at it from that point of view also. And these two fronts we have been meeting people across the country. It's a pan-India bond deepening initiative and also national fixed income literacy mission that we have been engaged with. So I would suggest, request, and appeal to all those who are present here, look at it from both the perspectives and support SEBI and give all your inputs to us.
Okay. Well, thank you so much to all the three of you for joining us and sharing your thoughts with us. I'm sure the story of bonds is just the beginning, and I'm sure that next time when we meet again in this room on this panel, the figures will be far more optimistic and there'll be lots more positive, optimistic things to speak about. Thank you so much.
Thank you.
Sir, ma'am, can I request you to kindly stay on stage for the felicitation? First of all, thank you, ma'am, thank you, sir, for your detailed insights and thoughts on the bond market. The role of bonds is not just limited to investments, but play a very critical component to catalyze the economy towards the goal of a Viksit Bharat. Thank you, Bhupendra Chaubey, sir, for moderating the session, and Nikhil for your valuable perspective. Can I request Mr. Ashish Jindal, co-founder of GRIP, to present a token of appreciation to Maninder, Cheema, ma'am, and Mr. K. Saravanan, sir. Next, I would like to request Vivek Gulati, co-founder of GRIP, to present a token of appreciation to Mr. Bhupendra Chaubey, sir. Thank you, sir. Thank you, ma'am. Next, from regulations and exchanges, we now move to a equally critical infrastructure for bond investment, which is demat accounts. Not just the record keeping of who owns what, but seamless buy and sell and the security of knowing that your money will be credited to your bank account. Requesting Mr. Samil Patil, CBO NSDL, to share his thoughts on the growth of the bond market.
Good evening to all. Respected dignitaries from SEBI, my fellow colleagues, ladies and gentlemen. Thanks, GRIP, for arranging this bond festival, first of its kind. Thank you for bringing together policymakers, regulators, issuers, investors, and market institutions to discuss a subject that is increasingly important for India's economic future. Behind every vibrant capital market lies trusted market infrastructure that enables confidence, transparency, and efficiency. NSDL, India's largest depository, we are privileged to contribute to this foundation through secure digital infrastructure that supports India's capital markets every day. Resilience ultimately comes down to confidence. We have heard the earlier speakers talking about confidence, trust, to build trust in this. So confidence that transactions settle smoothly. Confidence that information is transparent. Confidence that systems are secure. Confidence that market infrastructure functions seamlessly under all conditions. While building confidence, it is also important when you build a platform, an infrastructure, it is also important how you market it, how does it reach out to the length and breadth of the nation, how do you pursue the youngsters, the women to come and participate in these markets. NSDL has gone ahead and launched two very, very important plans. One, the Yuva plan, which caters to the youth of the nation, which means all youth below the age of 24 enjoy a settlement-free holiday for the next 3 years. This is for the development of the capital markets in India and also to reach out to the future of India and to enable this activity of investments in the capital markets. One, the Yuva plan, and very recently, on the 1st of April 2026, NSDL has gone ahead and launched the Women's Plan, which caters to the women in India. So all incremental accounts opened by women in India, demat accounts opened, they will enjoy a settlement-free holiday for the rest of their life. So these are the two very, very important initiatives taken by or plans launched by the NSDL, and it gives me it gives me immense pleasure to announce this today. This is for the benefit of the Indian investors to increase and cultivate the habit of investments in the Indian capital markets, and this is an initiative taken by NSDL. Last but not the least, technology. Digital issuance, automation, cybersecurity, straight-through processing, and faster settlements have become central to resilient financial markets. Emerging technologies such as the distributed ledger technology or the DLT and blockchain are creating new possibilities for capital markets. These technologies can enhance transparency, strengthen audit trails, reduce reconciliation requirements, and improve efficiency across the bond life cycle and for issuance of servicing and reporting. NSDL is the first depository to launch the DLT platform. At NSDL, based on blockchain, We continue to explore technology-led innovations, including DLT-based solutions to strengthen market infrastructure and operational resilience. During 2025-26 only, during this financial year, we are glad to inform that NSDL has launched 40 new APIs across its ecosystem to improve integration, operational efficiency, and digital connectivity for market participants to enhance ease of business. Concluding, as India advances towards Viksit Bharat 2047, the corporate bond market will play a defining role in financing infrastructure, manufacturing, innovation, and sustainable growth. At NSDL, we remain committed to strengthening the digital backbone of India's capital markets through technology, innovation, and resilient market infrastructure, whether through DMAT, digital platforms, cybersecurity initiatives, or emerging technologies such as DLT and blockchain. Our objective remains unchanged to enable trust, efficiency, confidence, and inclusive growth. A resilient corporate bond market can mobilize domestic savings, attract global capital, and finance the next generation of projects that will power India's growth journey. With that, I conclude and congratulations again to GRIP for arranging this bond festival. Again, I would say first of its kind in the capital markets, and wish you all the very best. I think this festival will gain a lot of fruits and premiums to you. Thank you so much.
Thank you, Patil sir, for your thoughts and your continued partnerships with GRIP and other OBPPs. I'd like to request Nikhil to present a token of appreciation to Samir sir. Thank you, sir. Now we are going to wrap up today's event with our final panel discussion by hearing what it takes to deliver all this financial infrastructure and work within the regulations to the last mile. How do we increase awareness and penetration of bonds in India? Joining us for this discussion is Mr. Vineet Malhotra, co-founder and CEO of Compound Express, Nikhil from Grip Invest. After 25 years building investment platform for BlackRock and HSBC globally, Vineet joined hands with the DSP Group to power the lakhs of mutual fund distributors in every corner of India to become better at offering investment products, including bonds. Moderating this panel, I would like to request Mr. Vaibhav Ladda, CEO of gripinvest.in. Kindly join us over the stage, sir.
Welcome, Vineet, and welcome, Nikhil. So we have been hearing from regulators, NSE as the exchange partner, their regulatory framework, the tech infrastructure, etc. Let's shift the perspective a little bit towards the investor side. How bond markets should be looked at from retail investors' perspective, what that means, etc., etc. So I'll start with you, Vineet. You have looked at different asset classes at BlackRock, at DSP, at HSBC, and you had the chance to bring all these asset classes to Compound Express as well. Why did you think that bonds is the right category worth leaning into, and why is this the right time to do that?
Firstly, thanks, Vaibhav, for inviting me, and thanks to everyone who's still here in the audience. So we created a platform primarily for mutual fund distributors. You know, the prior panel was given a question, how do you reach that rural part of India? There's one simple answer, mutual fund distributors. There's no one better suited than doing that, because I don't know last time who visited a post office, right? So the question is, mutual fund distributors have the reach, they have the clientele. We were talking to a bunch of them, in fact, some of them are in the audience today as well, that what is it that you want to do with your client? And the resounding answer that comes from most people is, I want to be a banker to my client. And how do you create a banker to a client? You make sure that all products that a banker gives to that client are available. So bonds became a very natural choice to add on to the mutual fund space. The other reason I think the market is right for bonds, it's not a product which you can just, I mean, you can click and buy if you know enough about it, but it needs some hand-holding. And we thought that with the right decision support tools, the right education material, right partnership with folks like GRIP, we would be able to bring a very interesting asset class to these distributors who in turn will educate their clients. So I think a lot of things stacked up, and we thought this is a category we would love to enter and try our best to make sure there is an awareness drive and there is scale.
Yeah, that's exactly right. We at GRIP do most of our work towards retail investors, but we have some of our partners and financial advisors today in the audience, and they also have to do their bit to take it to the larger set of investors. And may I just ask, what did you see in GRIP that you chose GRIP as the partner to offer bonds on Compound Express?
You mean, what did I see other than Nikhil?
Yeah.
Yeah, no, of course. You know, as a tech-first platform, the first thing we think is the rails. If you look at UPI, you know, UPI were the rails for payments. We wanted to create the rails for distribution. And we saw a very advanced way of thinking, availability of a large number of products on the platform. And I think somewhere the chemistry has to match if you want to work with someone. Whether it's a commercial side, the legal side, the technical side, it all came through pretty seamlessly. So we are about to go live very soon with them. I think these factors, chemistry, range of products, and a tech-first attitude. That's what I would say.
Yeah, we have been eagerly waiting to go UC live. So we spoke about retail investors, and a retail investor could be, you know, a high net worth individual. It could be someone in their 20s, you know, first job. They could be post 60s, you know, thinking about retirement. So I'd ask you, Nikhil, first, what kind of retail investors are we talking about here?
Yeah, I think the retail investor, am I audible? No.
No.
I think the retail investor of today that's investing in bonds is definitely a more tier 1, tier 2 resident, someone who is a slightly more mature in their financial journey, you know, maybe between 32 to 50 years of age, and is then thinking about diversification of their portfolio. But that's the retail investor of today who has been given a chance to have awareness. It should not be superimposed to say that this is the only person who will purchase bonds. I think as the sector evolves, this is who we have been able to reach. But if you think about where GRIP does today, 10% of PIN codes in India map to our users, right? So we do see broad participation. You know this as well as I do, that we actually are able to run performance marketing campaigns across some of the biggest PIN codes in the country, simply because we do see an emerging demand. I think to Vineet's point, the method of delivery and the product of delivery has to keep evolving for them to also come into the fold.
You want to add, Vineet?
Oh, I think Nikhil said it all. So,
okay.
yeah.
Yeah, I would just give an anecdote. In the last, like earlier, we used to think that retail investors would come from the top 8 cities. But in the last 2-3 months, we have first time seen the pan-India composition move towards higher than 50% of our total investors, which means that the reach and the applicability is everywhere. Okay, so we spoke about retail investors and the need for it. And, you know, Nikhil, you and I know what effort goes into putting together this kind of program. But what are some of the other measures which could accelerate this adoption in the broader markets? You know, we spoke about, like, one could be advisors, but what are the other measures, both of you, if you want to chime in?
I'll have a stab at it. So there are numerous measures because we are at such an infant state. You know, I'll give you an anecdote. I've lived many years in the US. I've invested in the US, I still do. And when I met my advisor first, we were looking at the asset allocation. So what's a typical asset allocation for somebody who's over 50 years old, right? 100 minus age.
Yeah.
That theory is so old and archaic that it doesn't work. So he started explaining to me all the different classes, and he said, how about some munis? I was like, yeah, muni kya hota hai? Right? What is muni? Suna hi nahi kabhi. So muni is a municipal bond. So when we were talking about bonds, they've gone down to, and you were talking about PIN codes, right, which is zip codes there. It goes down to municipality. So each municipality has a bond, which means my eyes opened up at 50 years of age to understand what a municipal bond is. Now, if that's me, imagine the need for awareness is massive. So the single most critical factor is make people aware. And I think events like this, you're doing a great thing by organizing a festival. I would love for this to become the great Indian bond ritual, meaning from a festival to a ritual, it keeps on becoming a practice. So awareness, number one. Number two, you can't just take a product approach. I think you have to think of inserting bonds into the asset mix and then showing them on a blended basis what does that mean from an asset allocation perspective. Having decision tools, having platforms, showing them reports which can show that XIRR with bond, without bond. And I feel it'll help the whole category. So awareness and decision support tools would be my two big sort of suggestions for getting that reach.
Hard to add to that. I think those are the big ones from a retail distribution perspective. Wishfully thinking, I think taxation, because taxation is a big arbitrage today between equity and fixed income, and hence even if bonds give you 12%, there is a difference to equity. Cheema ma'am spoke about the thought process around that, and I would say I think as GRIP as a company, as an ecosystem, we also have to think about delivering that message in a more simpler way, right? Regulated but simpler way, and I think that's a challenge that I don't necessarily have the answer for today, but we have to find it.
Yeah, interestingly, Vineet said it. It is not just about a product and making it accessible also. It still needs so much education and distribution, to increase that adoption. Vineet, I'll come back to you. So again, you have seen, and you just spoke about the US, so you have seen geographies, you have seen asset classes. Now you are developing this tech layer to enable mutual fund distributors and then get the adoption of different asset classes. What else do you see as your role, Compound Express's role in this ecosystem?
See, Compound Express is a layer that sits between the OBPPs and the end investor, or rather the distributor who sits before the end investor. I think our role is to achieve scale. That would be my number one goal. So when the distributor is clear, there are two ways to motivate a distributor, right? Risk and reward. The risk that your traditional lines of income will dry up, that's a risk angle. The reward angle is there is a commercial angle. There has to be a win-win. So the commercial angle is good. Everyone should win in this. The person who is in a fixed deposit at a very low rate of interest, moving to bonds, there's a big win for that investor, there's a win for the distributor. Compound Express will try to make sure that the range of products is available. Two, there is transparency, which today sometimes can be misleading. It's not the three alphabets, the AAA, which should drive behavior. There should be an understanding of true underlying risk. There are many aspects of it. So distributors can educate. We will have decision support tools which can allow people to see their simulated returns. We have a very sophisticated form of AI which is called a proposal generation mechanism, where you can insert something in and you can simulate the performance over a projected period. So we will try those techniques. I think we just want to get started. We are at such a nascent stage that we have to get started to see what else we can improvise. And we'll bring our learnings and we'll collectively try to make this a more scalable play.
Yeah. Okay, Nikhil, we just had everybody in the house, starting from regulators, exchanges, depositories, everybody we could wish for in a room, so to say. What are your 2 or 3 key asks that could accelerate this adoption that we are talking about, and for the furtherance of this bond industry?
I think number one, I'll keep taxation out because it's a very obvious one, right?
I think it has been mentioned 3 times now.
Too many times. I might end up repeating myself, but I think number one is definitely more issuers, right? Because more supply brings diversity. It allows people to create better portfolios even within the fixed income space. It gives choice. So I think the number one thing for us to solve, and part of it is happening itself. As there is more demand, there are more issuers, that's happening. I think that's number one. I think number two is what SEBI is also working on, and which I think Compound Express and this relationship will benefit from, is really a distribution code. If we can power every MFD, and SEBI is working to make sure that there are more and more MFDs to have the power to distribute a bond, I think that will transform the shape of the industry.
Yeah, and of course we continue to work with all the people that we have seen here, and would see some changes. Okay, I'll keep this panel short. I think it is past 6. So just one last question, and I'm asking this panel for a prediction. Currently, retail bond industry is at 4,000 crores. In a year, what could this number be?
I'll go first. Vineet, you'll have to say something higher than I have to say, hopefully. So I think a year makes sense because we'll be back here. Hopefully NSE will have us again here for...
We will have the next GIBF, Great Indian Bond Festival, so yeah.
Yeah, so we'll talk about how true that prediction is. The bond market, interestingly, compounds itself every year. Because when you invest, you basically get returns, and then people reinvest that money back. That's the phenomena that we have seen every year. Applying that simple rule, we'll be at 10,000 crores a month. We'll be at $1 billion a month.
$1 billion. Vineet.
Sorry, I don't do absolutes, I do relative. So what I would say is that it's not an absolute number I'll quote, but if we can get to 2% of every Indian's asset allocation, that's what I would go for. 2%.
Yeah.
It's higher than his, much higher. But I put a relative marker on that. It's a percentage of total because they're not going for a bond. They're going for a piece of their entire asset base, which happens to be a bond. So let's try to increase that base. Bonds will grow automatically.
Yeah, that's an interesting way to look at it. And we will have Great Indian Bond Festival 2027, and we'll see the 10,000 crore number or higher. Okay, thank you so much, Vineet. Thank you so much, Nikhil.
May I request you all to kindly stay on the stage for felicitation. Request Vivek Gulati, co-founder of Grip Invest, to present a token of appreciation to Vineet. Thank you, Vineet and Nikhil, for breaking it down for what it takes and how the entire ecosystem has come to play to make possible this dream we all share for the Indian bond market. Weber, can I request you to kindly stay on stage and deliver the thank you note to conclude today's event?
Good evening, everyone. It was a full house, and it was wonderful to see that full house. Now it is not, but I think it is past 6, that's why. As we come to the close of this Great Indian Bond Festival, I want to take a moment to say a heartfelt thank you to everyone who has made it possible today. First, a very special thank you to Maninder ma'am, Executive Director SEBI, and Saravanan sir, CGM SEBI, for being here with us today and for sharing their perspective on the regulatory infrastructure of the bond market. What is very fruitful is SEBI's constant endeavor to work with platforms like us and bring in regulations that do both things together. They make the bond industry more and more accessible, but still continue to safeguard investors' rights. I think that is a very fine line to tread, and SEBI, under the leadership of some of the people that we saw today, does it wonderfully well. Next, I want to thank you to Mr. Sriram Krishnan, Chief Business Development Officer, NSE, and Mr. Sameer Patil, CBO of NSDL, and the entire NSE and NSDL teams, for not just being here today, but for being such important partners in building the exchange framework so that investors can invest in these securities transparently and securely. Also, thank you for giving us this venue. I think it is very, very symbolic, and there couldn't have been a better place to launch this festival. Next, a big thank you to Mr. Anil Singhvi, Managing Director of Z Business, and he spoke about how the awareness matters in this industry. He has been a pillar in stock markets or public equity markets. Hopefully, we'll see him cover this industry going forward. Also, thank you to Mr. Bhupendra Chaube for moderating the first panel with SEBI dignitaries and making it a very, very insightful discussion on some of the things and also the comparisons between bond markets and equity markets. Next, I want to thank our partners, Tata Neu, ET Money, Compound Express, Vineet is here, MobiQuick, and Elevest. All these members of our ecosystem who are helping take bonds to the larger India. GRIP is doing its part, but partnering with such large names has increased and accelerated the adoption manifold. Then there are many GRIP customers, financial advisors who work with us in the audience today. Thank you all for your unwavering trust. I think you trusted us when GRIP wasn't what it is today and has helped shape GRIP to what it is currently. And it is wonderful to see GRIP and all of you here today. And most importantly, thank you to all of you in this room, all the partners, everybody who took time from their busy schedule to be here supporting us in this initiative, and of course the GRIP team who made it possible to make it such a grand success. Having said that, today is only the beginning. This is actually the kickoff of what we call as Great Indian Bond Festival. The festival runs for the next 2 weeks from today, 18th August to 31st August on our platform, and you will see much more of Great Indian Bond Festival in the next 2 weeks. If through this festival we could increase the awareness and education even slight bit to what it is today, I think we would have achieved what we set out to do with this Great Indian Bond Festival. On behalf of the entire GRIP Invest team, thank you once again and welcome to the Great Indian Bond Festival. Have a wonderful evening. And just please join us for the high tea after this. It will be, yeah. Thank you so much.
Thank you, Vaibhav. I would like to request everyone to join us for the networking high tea, just right side to the hall here. And I will request the GRIP team to join us on stage for a group photo. Can I request everyone to kindly join us for the high tea right next to the hall, and grip team to kindly join us on stage for a group photo.